So cooperatives are quite active globally. In fact, more than 12% of people are part of the more than 3 million cooperatives in the world. So there's 1 billion people who are members of cooperatives. And the largest 300 cooperatives and mutuals report an annual turnover of 2,000 billion US dollars. And cooperatives certainly contribute to sustainable economic growth and quality employment, and they employ 280 million across the globe. So cooperatives are quite, substantial in the business world, but unfortunately, in business programs, you often don't hear a lot about cooperatives. So I have a note here. They have a video, a TED Talk video in the lecture notes, and it's absolutely amazing. It's about 15 minutes, but well worth the time, and it really sums up everything you want to know about cooperatives and what they are in a very engaging way. So the speaker is absolutely fabulous. So I encourage you to listen to that TED Talk video. So just putting up some numbers here. I'm not going through all of this in detail, but just so that you could see from the Canadian perspective, there's about 182,000 people employed in the cooperative sector. So when we say cooperative sector, we are including both cooperatives and credit unions. And so overall, the cooperative sector in Canada has shown steady growth and stable growth. The number of cooperatives, though, is decreasing to some extent, and that's due to mergers. So particularly with the financial cooperatives, Canada's banking system is very robust, and there's a lot of requirements from an administrative perspective that banks have to adhere to, and that includes credit unions. So sometimes it's just not financially feasible for a lot of these small credit unions to fulfill all of the regulatory requirements that our banking system needs. So that's really what's behind a lot of the mergers. So then if they join, they'll go through one regulatory process for the larger merged co-op. There's been moderate growth in employment. Membership is increasing. Of course, co-ops are making a good contribution to Canada's GDP, gross domestic product, and making a contribution to household income. And cooperatives, unless they're a not-for-profit, for-profit co-ops pay taxes as well. And the cooperative sector in Canada makes up about over 3% of the Canadian economy. So in terms of what makes cooperatives different from, quotes, a regular business enterprise, well, it's really based on two concepts: cooperative values and cooperative principles. So the cooperative values, they are comprised of self-help, self-responsibility, democracy, equality, equity, and solidarity. And they adhere to ethical values of honesty, openness, social responsibility, and caring for others. So those are the core values of what really underlies the cooperative business model. So cooperative principles, they are very important as well in demonstrating the purpose of cooperatives, why they exist. So cooperative principles, first one is voluntary and open membership. Basically anybody can join a co-op. Democratic member control, and this is something that's really unique. So if you're in a for-profit business, and if you own shares in, say, Royal Bank, RBC, the more shares you have, the more votes you have, and you can have more control over the company. But the way a co-op or credit union works is it's one member, one vote. So if you have $1 million in a credit union account and I've got $100, we both still only get one vote. Member economic participation. So what this means, at the end of the year, if there are funds left over, if there's a surplus, there can be dividends, patronage dividends, which are issued to the members based on the value of the business that they do with the co-op. Autonomy and independence is another key feature. Education, training, and information. So this applies both internally and externally to employees, providing education and training, and also to members, and in some cases to the community at large, and thinking there in particular about credit unions, providing general financial management information sessions for people in the community. Principle 6 is cooperation among cooperatives. So this means cooperatives generally will help each other out and do business with each other. So for example, if you own a co-op supermarket, typically rather than going to a commercial insurance company, you would probably look at getting your insurance from a cooperative insurance company, and one of the big ones is of course the Cooperators that's headquartered in Guelph, Ontario. So and also in addition to doing business with each other, cooperatives are very helpful. They're not really all that competitive with each other, and they're very willing to share information and to help each other out. And the number 7, concern for community. So this entails a cooperative's involvement in making an impact on their community. So you could have situations where they make donations, to the local food bank, or if there's an individual adult or child in the community that needs funding to get to medical appointments, they would help out there. So there's many ways in which a cooperative can contribute and make an impact on their community. And when you look at cooperatives' annual reports, you'll see a lot of information there about their community involvement. And again, of course, there's lots of information on this in the lecture notes. So when you're looking at cooperatives, they're not perfect. Like any organizations, they certainly have, issues. For example, they have a long history of not being open to everyone historically. So, in some situations, they've excluded indigenous people or people of African descent. So, it's not perfect, but certainly I think, they're definitely improving over time. While co-ops are viewed positively, the expansion and establishment of co-ops was certainly a bit oppressive with respect to some indigenous communities. For example, the agricultural development in Saskatchewan would be one example. So I don't want to say that co-ops are perfect and for-profit businesses are really bad. That's not the situation, but it's important to recognize, some of the issues. So in this course, one of the key things is to really understand cooperatives versus other business structures. You need to have an understanding of how they differ. So in the lecture notes, there's a detailed table which outlines the key differences between cooperatives, share capital, and for-profit organizations. And co-ops really are more of a hybrid type of category between the for-profits and the not-for-profits. So when you look at this PowerPoint here, you see cooperatives are really kind of in the middle of for-profit and a not-for-profit. And, they could be grouped with social enterprises and trading organizations, trading charities. And the reason why I'm saying that they're hybrid is that even co-ops that have a for-profit designation, their sole focus is not on profit maximization that you would see with a traditional business. You know, they have to make a profit, obviously, to stay in business, but they are not, you know, laser focused on maximizing profit. They have to make enough to stay afloat, but not enough where they're accumulating millions or billions of dollars. So when they do have a surplus, they give it back to the members, they give back to the community. So, and that's why they kind of fall in the middle of, you know, they're not purely for-profit, not purely not-for-profit. So it's a bit of a hybrid. In terms of understanding cooperatives, they're voluntary associations that come together to address community need. So that's why they're formed. You might have a situation, for example, where you have a group of farmers, small farms. Each one of them, it would be difficult for each one of them to get their product to market. So what they would tend to do is form a cooperative that would then, they would sell their produce to, and then the cooperative would look after the sales and distribution of the products. So it's where there's a need and a private sector company hasn't come in to fill that need. So members of cooperatives can be individual or organizations. So it could be an individual farmer, or the farmer could be incorporated as a business, but then they need to find some way to get their product to market. So all members are co-owners of the cooperative. So meaning you purchase a share and you really own a piece of that organization. So by doing that, by purchasing a share, you are contributing to a shared pool of capital. So that money can then be used to access essential resources that allow them to address their shared needs. So if a group of, say, farmers are forming a cooperative to distribute and market their products, then they're all going to have to put some money into this to get us started. So that's obviously, you just can't start a co-op without any money, so somebody's got to make the initial contributions to get it moving. So in terms of how cooperatives are run, they all have a board of directors, and the board is selected from the general membership. So they make the major strategic decisions on behalf of the co-op. And all members, as I mentioned before, get an equal voice in key decisions affecting the co-op. So the board members, they decide on what needs to happen for the cooperative to serve the needs of the community and deliver service to the community. And typically a co-op would have a management team and employees to carry out the work of the co-op. One point to note here, most management and staff are members of the co-op where they work, but it's not mandatory, they don't have to be. Okay, so after the co-op pays all its bills, pays its expenses, there typically will be a sum of money left over, a surplus if you will, but not all of that can necessarily be given back to the members in form of dividends, because you need to have some cash remaining in the business. Sometimes you need to keep money aside because maybe you have to replace some equipment or do major building repairs, things of that nature. But so you look at your surplus, and then you know how much you need to set aside for key investments, key expenditures, and then you would look at identifying an amount that could be paid back to the members in terms of patronage dividends. So, you know, when co-op members pay themselves, they tend to reinvest in the community, and I always say with a co-op your money stays on Main Street, not Bay Street. So in a typical corporation, the profits don't necessarily stay in the community in which they are earned, but with a co-op the money just stays in the community. It's paid to people who work at co-ops. They pay out dividends to people who live in the community. They in turn spend the money in the community. So a co-op really benefits a local economy. So the discussion board for this module is, and this first PowerPoint here shows you the instructions, and I'm not going to read them again. They're the same for every module, so the instructions are the same. Now the question for this module is, how would you define the cooperative difference? So what it is that you think is unique or different about co-ops as a business model as compared to investor-owned entities? So when you're responding to this, refer to at least 2 of the assigned videos or readings. So you can use 2 videos, 2 readings, or 1 reading and 1 video. So you get the idea. I want you to refer to 2 of the resources that are provided in this Module 2. Okay, that concludes the overview of Module 2.